Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines. Tata-Sons says it will seek legal recourse after the NCLAT termed Cyrus Mistry's removal at Tata-Sons illegal. In the first such instance since its inception, the GST Council voted to impose a 28% tax on lotteries. The new rates will be effective from the 1st of March next year. Patanjali Ayurveda has completed the acquisition of Ruchi Soya after paying financial creditors. The largest lender, State Bank of India, gets 883 crore rupees. Prohibitory orders have been imposed in Bengaluru and Mangaluru in the backdrop of protests against the Citizenship Amendment Act. The orders in Bangalore will be in place till midnight of December 21st. And Asian markets are muted in opening trade as investors remain on the sidelines owing to the lack of directional cues. Let's talk about the US markets now. It was a mixed day with very small moves for the US markets, while the S&P 500 and the Dow Jones snapped their 5-day winning streak. The Nasdaq eked out minor gains for the 6th day to post another record closing high. The focus will now be on US GDP data to be reported at the end of this week. Renita Young of Bloomberg News wraps up Wednesday's Wall Street action in this report.
U.S. stocks fluctuated for much of Wednesday's session, and all the three major indexes ended mixed as investors assessed a flurry of corporate news and an impeachment vote loomed in Washington. During the session, trade worries seemed to recede a little bit. We saw tech leading much of the way along with energy shares, and FedEx slid on a cut in its forecast as AMC Entertainment was cut at Bank of America, which said it sees a weak slate of 2020 movies. Meanwhile, WTI was lower during the session and gold hovered around unchanged, and the revised U.S. GDP data will be out on Friday. And that's a look at your Wall Street action on Wednesday. In New York, I'm Renita Young for Bloomberg News.
And as we speak, the House of Representatives in the U.S. is voting to impeach President Donald Trump. We'll bring you updates as and when we receive any final outcome of that vote. In the meanwhile, let's take a look at the Asia-Pacific region and how the markets there are faring. Rosalind Chin is joining me live from the Bloomberg studios in Hong Kong. Morning, Rosalind. Seems to be a bit of a narrow movement for most of the markets, especially in the US, perhaps some in the Asian region as well. How's it looking when you take a closer look?
I think you're right. I mean, even though this impeachment of Donald Trump and the run up to it, has been classified as a non-market event, of course, investors around the world are still watching it very closely for what it might mean further down the line. We've got the MSCI Asia Pacific Index pretty much flat, but it is losing. It's dipping to negative territory by less than 1/10%. And that pretty much sums up the rest of the region. Pretty lackluster today, kind of like the weather outside here in Hong Kong. A little bit grey, a little bit soggy. It's kind of mixed, though, if you look around, despite the fact that some of the markets do lack a bit of impetus this morning. And we do remember, of course, we're also starting to wind down ahead of the holiday season with Christmas coming up next week as well, of course. So if we look at Japan, the Nikkei is down about just over 1/10%. Topics is losing less than 1/10%. We did see probably some profit taking going on, but we're expecting the BOJ to make its policy announcement later today. It's expected to hold, of course. We've got Abe's big stimulus coming up as well, so the BOJ unlikely to make any big moves or unexpected moves at this point. In Hong Kong, the Hang Seng Index is also in negative territory by just a little bit, as is the Shanghai Composite and the CSI 300 Index. Not a lot of movement going on there. The HSI, though, has been on a pretty good winning streak of late, and it may still end the year in positive as we go into the last couple of weeks of trade here. I want to look at Australia now. There's a bit more going on in Australia right now. The S&P ASX 200 is losing less than 1/10%. We did have some good or better than expected unemployment figures out of Australia today, with the rate dropping to 5.2% against a forecast of 5.3%. Unexpectedly better than expected. Most of the jobs gain was in the part-time sector. We saw the Aussie rising against all of its G10 peers. Right now, the Aussie against the US dollar is at 68.71. The 10-year bond yields climbing as market price in a lower chance.
We're just getting an update. Rosalind, we're getting an update that we've just heard, in fact, that the House of Representatives has voted in favor of impeaching President Donald Trump. Let's cut across to network to see what the latest is.
All right, she hasn't spoken yet, but right now they're just voting. So we'll get back to Nancy Pelosi when she does take the podium once again. Let's take it back to the China context here, Benny. I mean, we've been talking about this OMO that we just saw from the PBOC yesterday, reverse repos. Are these enough kind of catalysts you see for Chinese stocks actually to keep going?
Yeah, I think like there's two things you have to notice because of the year-end settlements, like the liquidity, and also like a Chinese New Year coming. So two things actually being pushed PBOCs to like release more money in the market. But remember that all this money is a short term. Like you can see it's a 14 days like reverse repo a lot of that. There's a pass through the whole year, pass through like into 2020 a little bit. So on this case, I think that may be a short-term liquidity arrangement only. I would say like you still need some like a RR cut in those long-term capital into the market to push the market more.
All right, so, well, it's nearly done, and we're expecting House Speaker Nancy Pelosi to speak very soon. In the meanwhile, let me go back to Rosalind. I'm sorry for having interrupted you. You were talking about currencies, Rosalind.
I was talking about the Aussie dollar, but of course everyone is watching this impeachment vote, as I mentioned earlier, to see what will happen. Of course, as you mentioned, President Trump impeached by the US House on abuse of power charges, and that situation is ongoing. However, when I was talking about Australian dollar, yes, we did see it climbing against all of its G10 peers earlier on the back of that better employment news. We are also watching New Zealand because its third quarter GDP results were better than expected, growth of 0.7% quarter on quarter against estimates of 0.5% gain. So two sets of data out which point to perhaps some green shoots, at least, in terms of those economies, and something to watch perhaps in 2020. Back to you.
Thanks so much for that, Rosalind. Now, apart from the impeachment proceedings, which perhaps will be concluded very soon, at least in the House of Representatives, President Donald Trump is also facing pressure over his bullishness on the trade deal with China. He claims that it will double exports from the US, but will that cover the economic costs of the trade war itself? Was it all worth it? Sean Donnan of Bloomberg News gets us more.
Be the big question that Donald Trump is going to face as he goes to the voters next year. The big credential that he's trying to take as he faces impeachment in the House, the big credential that he's trying to take into the election year next year is his management of the economy and his rewriting of the rules of global trade and America's trade relationship. He's going to get the passage of a new North American free trade agreement through Congress. He has announced this phase one deal with China with these purchases. But what the president doesn't like to talk about very often is the damage that has been done and that economists have calculated as a result of these trade wars. He's talking about $200 billion in purchases over 2 years, everything from airplanes to chicken feet and pork chops. But if you tot up the economic damage that's been documented by folks ranging from the International Monetary Fund to the Congressional Budget Office here and our own economists here at Bloomberg Economics, you get a dollar figure that is much higher than that potentially. By the end of next year, our own economists calculate that you will get a lost GDP, lost economic output of more than $300 billion. And that, of course, continues as these tariffs remain in place. And the bulk of these tariffs will remain in place despite this phase one deal.
Sean, so we still have to see the details of the deal, but so far from everything that we've heard, what's been the reaction in Washington and also from business groups?
Well, in a funny way, this deal, while we haven't seen the details, has managed to appease everybody in Washington, which in the age that we're in, that kind of age of great partisanship, is actually pretty rare. It has managed to appease the China hawks by keeping a lot of tariffs in place. It has managed to appease the business community by giving at least or signaling at least some progress in negotiations with the Chinese and some potential commitment commitments on intellectual property and so on. And it's even kind of appeased a lot of the other critics in Congress who at least see some kind of pause in the trade wars ahead.
All right, let's take a look at what else is making headlines across the globe. Ritika Gupta of Bloomberg News brings you the first word headlines.
Iron ore superpower Australia expects prices to decline next year as a pickup in supply eases a global crunch. The government's quarterly report sees iron ore at an average of $63 as global output rebounds. That figure is slightly higher than the September forecast, but would still be a 21% fall from this year's average price. The metal rallied to more than $120 a tonne in July. New Zealand's economic growth accelerated in the third quarter, suggesting its slowdown is over and the central bank may not have to keep cutting interest rates. Third quarter GDP expanded 2.3% in line with expectations, whilst growth from the previous quarter beat estimates. The biggest boost in the quarter came from the retail and IT sectors. Hong Kong is jumping into virtual banking with a shake-up of the system that may take as much as 30% of traditional revenue. Zhong'an Technology's ZA Bank is the pilot and is initially targeting 2,000 retail clients before gathering feedback ahead of an official launch. ZA was among companies granted a license for a virtual bank in March by the Hong Kong Monetary Authority. The de facto leader of Myanmar says last week's genocide case at the International Court of Justice neglected key facts about the Rohingya conflict. In her first public comments since The Hague, Aung San Suu Kyi said the hearing failed to mention historical clashes between the army and militant separatists. She admitted violations of human rights but insisted that could not be considered genocide. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
All right, let's talk about how the markets are setting up here in India. Agam Vakil is here to tell you all about the trade setup for the day and also what's happening in the futures and options space. Agam, well, we had another day of gains yesterday for the benchmarks. So highs, what are we looking at today? It's a little muted across the globe.
Yeah, of course, and we're expecting that considering so much that has been spoken about the U.S. presidency. But it seems at this point in time it's very unlikely that it may have a significant impact on our Indian markets. But with that said, we closed at life highs yesterday. Well, I'm sure a lot of traders out there will start anticipating just a little bit of consolidation, if not a correction from here onwards, and when that can come through. That's a question that perhaps can be answered over the course of the next few days. But for now, as I was suggesting, and as Alex did mention, we did close at a new life high with the Nifty at around 12,221. But we didn't have as much support from the broader markets this time, as you can see evident in the kind of returns. And that was also the case when it comes to the banking sector. The PSU banking index specifically in this case down around 2%. But moving on to talk about, well, your ADRs, we have, again, mixed cues, but something like a Tata Motors did come off along with ICICI Bank. Tata Motors, of course, related to, well, the Tata Sons chairmanship at the in the news. But, well, we are going to have to watch out for that one. Nothing else that actually stands out in terms of ADRs. But in terms of fund flows, it's yet another day where we've had strong inflows coming in from FIIs. And this time, on a net basis, we have had buying worth 1,837 odd crores and DII selling stocks worth 1,268 odd crores. So caution from DIIs, FIIs move into buying. But, you know, it's coming down to your contributors. We do have some of your heavyweights on expected lines like HDFC Bank, Reliance Industries, ITC, HDFC Limited, all aiding the indices. HDFC Bank here stands out considering it moved above the milestone 7 lakh crore market cap. But as far as futures and options go, let's also take a look at how things are shaping through here. So we're starting to see just a little bit of unwinding. Is it that traders are getting a little more cautious? That, of course, we're going to have to see. But Nifty banking futures also, well, not too much change there. But in terms of change in open interest in options, okay, so this is, of course, not much change. That 12,000 put is the one with the maximum open interest. But I want to talk about the change in options. And Yeah, so this is the 12,200 put, which is actually seeing the 12,200 put, mind you, not the 12,200 call, is seeing a writing around now. And this also means that at least a one corner of the market is extremely bullish, even at this point in time. And moving on to, well, the awakes at unexpected lines fell by another 1.5%. The Nifty put call ratio has also edged higher to around 1.7. And well, in terms of stocks, let's pull that up and see where we are seeing traction. Tata LC once again resuming its uptrend, a lot of strength, even though it did have some of the gains knocked out because of the news with respect to Cyrus Mistry. Max Financial, Mindtree, and MDC all looking at a surge in open interest. And in terms of stocks which are seeing unwinding, let's pull that up as well. GSW Steel, United Breweries, and Cadila Healthcare looking at declines in open interest. Alex, I reckon today, well, we very well may see a little more consolidation because I'm sure there will be a tussle between the bulls and the bears, and we are certainly at heady levels at this point in time.
Absolutely. Thanks so much for that, Agam. Meanwhile, let's take you through some of the stocks that you have to watch out for in trade today. Yash Upadhyay is joining me to tell you all about the stocks in news. Good morning, Yash. What's on your list today?
Morning, Alex. Not a very long list, but NMDC is right at the top. And another day, another positive coming in for the company. And this is after the company said that the Indian Bureau of Mines, IBM, has approved the company's mining plan to enhance the production of iron ore from Kumaraswamy iron ore mines from the current levels of almost 7 million tons per annum to 10 million tons per annum for the year 2020-21 and 21-22 as well. Goa Carbon has said that it has managed to resume production at its plant in Odisha from December 20. The plant was shut down for maintenance purposes. Might see some reaction coming in on Lemon Tree Hotels as well after the company has said that it has signed a new license agreement for a 44-room hotel in Goa, which is expected to be launched in April of next year. NBCC small business update coming where the company has said that it had secured orders worth close to 8,861 crore rupees in the month of November. And lastly, Rallis India too had held an analyst meet yesterday, and the company has said that they are expecting a steady recovery in demand environment during the Rabi season, as well as higher sowing and reservoir levels should be a positive this time around. Lower input prices may support domestic agrochemical margins in the near term as well. They have maintained their 5-year capex guidance at around 800 crore rupees to develop new active ingredients and enhance the backward integration business model of theirs.
Thank you so much for that, Yash. Now, we told you yesterday that the GST Council met, and it is for the first time since its inception that the GST Council voted on a proposal, and that was to bring lotteries under a uniform tax rate. Nikunj Ohri tells you about that decision and all of the others that were made in the 38th GST Council meeting.
The GST Council has voted for the first time since its inception to have a uniform rate for state-run and state-authorized lotteries. This uniform GST rate has been decided at 28% and will be effective from March 1, 2020. Remember, earlier state-run lotteries were taxed at 12%, while state-authorized lotteries, meaning those lotteries that are run by private players, were taxed at 28%. Now, both these lotteries, state-run and state-operated lotteries, will be taxed at 28%. Besides this, the GST Council was also briefed about the revenue position that current GST revenue position by committee of officers that was constituted to augment GST revenues, and the committee has given a representation on various ways through which voluntary compliance under the GST regime can be bettered or improved, ways through which tax base under the GST regime can be increased, and measures to improve return filing under the GST regime. Now, these measures come at a time when GST revenues are on a decline and compensation to states is increasing, which has led to deferment of compensation payments to the state governments by the center government. Now, there were strong comments made by some of the finance ministers who called deferment of the GST compensation to states as good as a debt default by the central government, and the finance minister on this has commented that the central government is committed to compensate states for any losses that they incur in first 5 years of the GST's implementation. Besides this, although there was no major rate cuts or rate hikes announced in the GST Council meeting, there was a small tinkering done where long-term leasing of industrial and financial infrastructure plots owned 20% or more by state or the central government will be exempt from GST. Earlier, this criteria was that central or state government should own 50% or more in such plots to be able to exempt from GST. Another important decision taken by the GST Council is to restrict input tax credit to 10% of the eligible credit for businesses if their invoices have been uploaded by their suppliers. Remember, last month the government had amended rules to restrict input tax credit to 20% of the eligible credit, and now this has been further restricted to 10%. This has been done to block or avoid fraudulent input tax credit claims by certain businesses. Besides this, there are two other announcements that the GST Council has made today. It has waived the late filing fee for GSTR1 returns for returns filed from July 2017 to November 2019, and if these returns are filed by January 10, 2020, the late fee on these returns will be waived. Besides this, the annual return GSTR9 and GSTR9C for financial year 2017-18, the last date for filing these annual returns has been extended to January 31st, 2020 from December 31st, 2019.
All right, updates from the Insolvency and Bankruptcy Code proceedings. Patanjali Ayurved is now the new owner of Ruchi Soya, the Baba Ramdev-backed company, which had sought some time to pay on Monday, has transferred the amount. Vishwanath Nair reports.
Baba Ramdev's Patanjali Ayurved has finally taken over Ruchi Soya's assets under the insolvency and bankruptcy proceedings. According to what sources are telling BloombergQuint, Patanjali Ayurveda paid about 4,111 crore to the financial creditors of Ruchi Soya, led by State Bank of India. State Bank of India, which had made claims about 1,800 crore, is set to get about 880 odd crore as part of this transaction. Some of the other lenders are also taking a significant haircut on their outstanding dues. Now, remember that the total claims by the financial creditors was close to about 9,300 odd crore. So the difference or the haircut that the lenders are going to take is close to 56% in this case. However, this is still one of the large resolutions that have taken place under the Insolvency and Bankruptcy Code just this week, right after ArcelorMittal took over SRCL on Monday. Now, on Monday as well, Patanjali Ayurveda had actually approached the NCLAT, the National Company Law Appellate Tribunal, to seek more time to complete this transaction with Ruchi Soya. The idea was that they would have deposited the funds into an escrow account controlled by State Bank of India. However, the distribution of funds would take a little more time. By Tuesday, the NCLAT had actually given them 7 days to complete the transaction. However, Patanjali has managed to finish that by Wednesday. And now what we understand from our sources is that Ruchi Soya will be transferred to Patanjali Ayurved. The assets will be officially transferred to Patanjali Ayurved on Thursday after a big board meeting that will take place in the company.
Now, in a big win for Cyrus Mistry in his tussle with Tata Sons, the National Company Law Appellate Tribunal has ruled that his dismissal as chairman of Tata Sons in 2016 was illegal. And what's more, Mistry seems to have come out on top on all the fronts that he fought on. So what does this mean for both Mistry and Tata Sons going forward? But BloombergQuint's Menaka Doshi spoke to Somasekhar Sundaresan, who is the counsel for Cyrus Mistry, to get a sense about where next from here.
On the limited issue of whether he gets reinstated as an executive chairman, a stay has been granted for 4 weeks. It is clearly evident from both sides that he was not seeking reinstatement in office. But I think what happened is that the courts found the entire conduct so perverse that they have restored status quo ante. That is to say, they put the company back in the position it was in before these actions were initiated on the 24th of October 2016. So essentially that's part of the outcome. In any case, as you remember, he had a residual tenure of just a few months at that time, and it is a lack of grace in which it was handled that really underlined the arbitrariness of that conduct. So it's not as if he would be desirous to go back as an executive chairman, or the operationalization of the order, practically speaking, is not something that would work even at his desire in terms of a reinstatement in office. The key question is a board representation for the other shareholder in the company, which is the group, and that part has not been stayed. So therefore, the real question is not about the executive chairmanship. That's not being disturbed overnight anyway. But to put the minority shareholder back in the position it was in before this whole saga started.
Mr. Mistry had voluntarily stepped off some of the Tata Group company boards, and when it came to the Tata Sons board, he had been voted out. Now with this order, does he automatically get restored to directorships, which is that tomorrow, if a board meeting were to be called of Tata Sons or any of the other Tata Group companies that he earlier used to be a director of, would he now still be a director thanks to this order?
Saying the position is, as far as Sons is concerned, the order is that he is restored as a director, or the minority shareholder gets a directorship. And therefore, if you are restored to the original position, the removal as a director was only a consequence of a removal as executive chairman. Therefore, the order essentially puts him back in the board. Whether he'd want to be a chairman or not is his sovereign decision. That's a call he will take. And we've said that we're really not craving for that office. But for the substantial shareholder of 18% to not even be represented on the board was an oppressive act. And that reinstatement is not stayed.
So I'm correct in understanding that hypothetically, if a board meeting of Tata Sons were to be called tomorrow, Mr. Mistry, by virtue of this order, would be able to attend that board meeting as director?
That would be the position in law.
That would be the position in law. And that would apply to the various other boards of the other Tata Group companies as well, where he was director and he had either stepped down or had been asked to go, by virtue of the events that took place in October 2016.
Look, I'm still in the process of reading the order. I've not seen whether this also applies to the other companies. I do know that this specifically was a ruling in relation to the holding company, which is Tata Sons. But I'm not sure if the same
I can read it for you. In the result, Mr. Cyrus Mistry is restored to his original position as Executive Chairman of Tata Sons Limited and consequently as Director of the Tata Companies for the rest of the tenure. That's what the NCLAT judgment says. So I assume that includes all other group companies on which he was already director at that point in time.
That's correct, yeah.
All right, fair. The next question I wanted to ask you was the outcome of Tata Sons being restored to public company status. The NCLAT has said that as of today or as of now, on the Registrar of Companies registrar, it will no longer be a private company, it will be a public company. That means as we stand today, Tata Sons has been restored to public company status?
That's correct.
Okay. What is the gain for Cyrus Mistry or any of the minority shareholders from such a move? Can you explain to me why this is a good outcome for your side?
So for a public limited company, the law requires a far greater accountability and oversight by an effective board as compared to a private limited company. This also has far-reaching external implications. In fact, the whole insurance sector was in jeopardy because the monies that had been lent to a public limited company suddenly became monies that are lent to a private limited company, and that inflicted a lot of costs and losses because those debentures and that debt had to be offloaded or repaid. And therefore, this restoration is a very important measure from the governance standpoint. The very fact that a private limited company is lightly governed as compared to a public company is what you see manifesting in the insurance law, which says an insurer must not subscribe to securities and debentures of a private limited company. So this is a very, very important development. It's a very important facet of the challenge that was involved in these proceedings.
I know you made it clear that this was not central to the case, but I do also understand, from my understanding of company law, that there are restrictions on the sale of shares of members of a private listed company versus public listed company, and therefore this reversal of status for Tata Sons will also be beneficial for a shareholder like Mr. Cyrus Mistry, even though I'm not suggesting he's in any interest or hurry to sell one or two or any of his shares.
That could be a consequential fallout. That's not the driver, but this was a very important facet, is what I said,
right,
from a governance point of view.
Well, that conversation is longer than what you just saw, and you'll find it on the website BloombergQuint.com. So in case you want to have a look, do log on. You'll find several other stories on BloombergQuint.com as well. Let me take you through a couple of them. First up, protests continue against the recently passed Citizenship Amendment Act. Prohibitory orders have been set in place in Bengaluru and Mangaluru in the backdrop of these protests. The orders in Bengaluru will be enforced for 3 days, starting from 6 a.m. today to the 21st midnight, and those in Mangaluru will remain for 2 days, starting this morning. The orders seek to prevent people from carrying out protests and demonstrations. Now, the Reserve Bank of India has told the Bombay High Court yesterday that its decision to grant approval to ICICI Bank for the termination of appointment of Chanda Kochar as Managing Director and Chief Executive Officer was fair and not arbitrary. The central bank filed an affidavit in response to a petition filed by Kochar last month challenging her ouster as the MD and CEO of ICICI Bank months after she voluntarily left the private sector lender. All right, that's all you need to know going into trade today, but clearly there's lots that's coming up even as we speak, so do stay tuned to Bloomberg Quint.